Good afternoon. I'm Dryden Pence, and it's February 19th, 2021. I want to cover a couple of things with you today, very quickly, that'll help give some perspective on what's going on in the world today and the markets. We're going to talk about the virus, the vaccine, the economy, the markets, some policy things that are going on, and then try to wrap it all up with, so what? What does it really mean from an economic or market standpoint? What does it really mean according to our daily lives? So let me get right into it. Interestingly enough, the big story has been for the last year, COVID-19. But if you look at it now, if you look at the United States 7-day average of COVID-19 cases versus deaths, we can see that the number of cases is beginning to fall off dramatically. You see these big waves, and then, after it works through itself for a little while, they go down. So we've gone from a couple of peaks. We had Thanksgiving, we had Christmas, we had New Year's, and then now we're on the other side of that. And so average daily cases has fallen off dramatically. Now, the deaths will begin to fall off a little later than that. There's a lag factor. As a matter of fact, you can also see the lag factor as it goes to hospitalizations. So again, this is what these waves look like. And this is the statistics around the hospitalizations in the U.S. from COVID. Now, there's some interesting things in the data I want to point out. And the first one is that vaccines are working. Okay, so the first big group of people that we inoculated and gave vaccinations to were those people who were in nursing homes. And so now that you can see, if you look at that bottom line down there, the people that are getting cases in nursing homes is beginning to fall off. A little bit different than the rest of the population. So we're seeing that the vaccines are working. So that's important, but the other thing that's important is to recognize, as we said in our last video, one of two things is going to happen. Either you're going to get COVID or you're going to get vaccinated. Pretty much one of those two things are going to occur. And once you've gotten COVID, you do have antibodies for a while. And why is this significant? Because there's a lot more people who have gotten it, have been infected with it, that have been reported. So this is a study that gives them estimates of the total number of people that have actually really gotten it. So as you can see, the number of reported cases have gone up, but also the number of unreported cases have gone up. And then when you move through that and you look at the number of inoculations we're doing every day, it's about 1.6 million now. Two big things come to pass is that we're now vaccinating large amounts of our population very quickly, right? And that we have enough of the vaccine, and we're doing it fast enough that we'll get to about, if all we did was vaccinate, we're going to get to about 75% of the population in about 8 months. So that puts us at the end of the summer in August. Now, the other thing is if you look at that number, right, you already have a lot of people that have already gotten it. So the reality is, when you take those who have gotten it and those who are getting vaccinated, we're probably closer to herd immunity than a lot of the published numbers suggest. Why is that important? Well, there's two or three things that are important about that. One is timing, because it affects how the economy opens up. And then the other is a healthcare issue, how it affects people in our population. And indeed, when you look at it, when you look at the system here, you're seeing a lot of people in the younger areas who are getting COVID, but they're recovering. Now, the percentage of mortality, right, is pretty high among people over the age of 85. It begins to fall off dramatically. The younger you get, the less deadly this is, right? The older you get, the more deadly it is. So we're beginning to see this shake out in how we care for people, how people recover, how people get vaccinated. All of these things are telling us that we're protecting. At first, we were protecting everyone from everyone. Then we've gone to protecting those who are at most risk from anyone, and we're protecting those who are at most risk in our older population. But now we're seeing, with the two big elements of vaccine and the fact that a lot of people have already gotten it, and we're moving towards herd immunity. So lockdowns are becoming unnecessary. This is very, very important. I can't stress it enough. Lockdowns are becoming unnecessary. The excuse for having lockdowns is going away. That matters a lot for two big things. It matters a lot for the economy because we're able to get back out and have some semblance of a return to normal economy. It also plays into the mental health of people. A lot of people have really kind of reached the end of this look at COVID, and they're really tired of the COVID cloister. And so people are kind of beginning to break out from that. It's a human behavior issue. So we're kind of at the end of this cycle where people are willing to tolerate it. So we have things that are going on. We have the fact that people are getting vaccinated. We have the fact that a lot of people have already had it. And then the fact that people's tolerance level for some of these lockdowns is going away. So you're seeing this moment of kind of evolving, breaking free. And that's important for the economy. That's also important for the mental health of our populace. So these things get important, but we have to protect those who are greatest at risk. So here's the things we know, right? Every day we're closer to herd immunity, but we're not really sure, how many people are going to really take the vaccine, and we also aren't really sure all of the long-term data effects. So we're going to continue to learn this as we go through. And then also, as we said, you're either going to get the vaccine or you're going to get the disease, one of the two. And we don't know how long immunity lasts yet. So the thing that we have to pay attention to is it really isn't going to be a world post-COVID. It's going to be a world that is a post-COVID world. And what I mean by that is the world's going to change. It's going to be different. And things are going to have to be a little bit different for us going forward. And this may be one of these things that this disease becomes endemic and we have to get vaccinations, every year, every other year. But at least we'll be able to deal with it better. Now let's talk about this year and what it means the most for us. You see that probably by the time we get to the third or fourth quarter, enough people will have had the vaccine or had the disease that will kind of hit this herd immunity piece, and we can move forward to a normal or more normal level of economic activity, a different version of normal anyway. So it's still a big contest between stimulus versus virus from the economic standpoints of this. And we look at the world as a tale of two halves. The first half of the year, it's going to be government stimulus. And the second half of the year, as people kind of break out of this, as we reach that herd immunity moment, it's going to be pent-up consumer demand, right? There's two big things that this year are going to stimulate the economy. First half of the year, government. Second half of the year, the populace. Now, because here's what's happened. You've seen this slide before if you watched my previous videos. When we initially ended up with this problem, it was of stimulus versus virus, and we actually had more stimulus than we did virus. And then for a while, that's kind of run out, so we kind of got evened up on that area. And then now we're talking about yet another round of stimulus. And the stimulus worked. I mean, take a look at this. Since July, retail sales are back above pre-pandemic levels. That's important. Now, unemployment has recovered dramatically, but we're not back to where we were before. There's still some room to go, but there's something that's very important to pay attention to in these unemployment levels. And I don't wish to make light of the economic disaster that this has been for some families. This has been really, really hard for a lot of people. But as we come out on the other side of it, we've noticed that it's really defined to a couple of key sectors. So the leisure and hospitality sector for unemployment and things like that has been devastated. But other sectors have begun to recover, and they're doing much, much better. So where we are today is that the recovery is really focused on one major segment of the economy, leisure and hospitality, right? Everything else is beginning to kind of do a lot better. And where that means is that you have the higher income people are kind of fully recovered or doing much better. You have the middle income people, they're getting better, but then the low wage sector is still having a long way to go, and this one sector of the economy. So this means that this next round of stimulus, if they can get the political will around it, a focused stimulus could do really a lot to help that sector of the economy that needs the help the most. And we still have to take a look at overall continuing claims of unemployment programs. So we're beginning to see significant improvement in that area, but we still have a long way to go. And that's why this first round of stimulus in the first half of the year is going to be important. It's going to finish the bridge that we need to get to our world post-COVID. That's important. Now, here's the other thing. I've talked about government stimulus, but I want to talk about stimulus from the populace. And this is what's most important. This is what's the big thing for the economy. And we see this happening in the second half of the year. This is all about pent-up demand because a lot of people have not been spending the money they were spending before because they were mandated into shutdowns. Now they've saved money and they are just dying to get out and do something. And so as soon as they're able to do so, we think that the significant amount of money that savings rates have reached a big high is going to start being spent. So the stimulus then moves in the second half of the year to that which is generated by the populace. So what does this mean for the markets? Well, what's interesting is that the markets seem to be kind of near all-time highs. But is that unusual or is high too high? And the big thing to recognize here, if you think back through history, when we have moments that we have very low interest rates, you can have higher price to earnings ratios on stocks. There's a lot of math around the way this happens, but as long as the Federal Reserve is keeping interest rates very, very low, then the prices of stocks relative to their price to earnings ratio and those things are able to be a bit higher before any adjustments need to occur. So the point of the matter is while PE ratios are higher, they're not necessarily unjustified because the interest rate is low. Now, if we look at this also, how the markets are playing into this large surge of savings in the United States, this money is going somewhere, right? A lot of people are saving money, and now what they're doing is they've started investing it into the markets. They kind of are past the moment of not knowing what was going to happen to them to COVID, to being able to deploy this capital. And when you think about it, 10 million more new brokerage accounts were opened in 2020. That means those people that needed the stimulus to survive spent it on the things they needed to survive. Those people that didn't need the stimulus to survive have done one of two things. They have either paid off debt or they've begun to invest it. That's what happens with money. You either spend it, you pay off debt, or you invest it. One of the three. And we're beginning to see this play itself out. So a lot more people have opened brokerage accounts than really ever before. And we're seeing this in the market. If you look at the stock markets, and we've seen like more and more activity is being taken on by the retail investor. This will probably in the future create some additional volatility in the markets that we can pay close attention to and take advantage of when the time comes. Now let's talk about policy, because we've had an election. The most important thing about the last election is it's now over, and so that we can begin to take a look at what does policy look like. There's a lot of uncertainty around this now because there's a very slim margin in the House of Representatives, and you have almost a virtual tie in the Senate. So many things are going to come through reconciliation. Right? And it's going to be 1 or 2 opportunities a year for some of these policies to be put in place. And you have a couple of senators that are Democratic senators that sometimes vote with the Republican majority. So be prepared for more drama politically throughout this year, but it's going to shift and be over in the Senate. Those are things to pay attention to. But as we move through trying to figure out policy going forward, these are the things that we have to, we're going to see here in the first half of the year, a significant stimulus plan, right? They're going to do that one way or the other. You're going to see a lot of money put into stimulating the economy to get us through this first half of the year. Then we're probably going to see some situation where they're talking about tax increases. That's going to create some headline things, but we don't really see the tax increase thing being effective in 2021. Whatever they do will probably be effective in 2022. We're just not quite sure what that's going to be. And then infrastructure is on the agenda, and that's important because it's a good investment in the future of our country. So there's going to be some interesting political drama about all of this, but it still is all on top of a fairly strong underpinning for individual investors and the markets. So the things to watch out for is a pickup in inflation. A pickup in inflation would make people think that the Federal Reserve might raise interest rates sooner than they normally would. And if that's the case, you could see some volatility come into the market based on those expectations. So we have to watch those inflation numbers very carefully to try to figure out. Because remember, I said, the reason why the market can have these sustainable high prices is because interest rates are very low. Something that's going to move that interest rate number up might affect the calculation on equity values. And then the other thing is that we're now beginning to see, as we're a year into this COVID stuff, we're beginning to see some supply chain disruptions. And those are somewhat temporary in nature, but they do cause some price increases and some shortages in the supply chain. Those are things that to be very, very careful about and things to watch as we go forward. So in the end, what's the so what? Well, the first half of the year, it's going to be government stimulus. The second half of the year, it's going to be pent-up consumer demand, and the consumers, in many cases, will have the money to do that. So the underlying driver of the economy is actually in reasonably good shape for various reasons throughout the entire year. So we're somewhat constructive around the economy itself and around the markets. So as we look forward to this year, take a look at the big picture around this and recognize that we're fairly positive for the year. There's going to be moments of volatility. I don't want to give you any indication that there won't be, but the underlying circumstances of both the economy and the markets are pretty decent at this point. I hope this is helpful. We'll be back next month to give you some greater details. Thank you very much. I appreciate your time.